So the basic truth about negotiating an agreement with a payer, an insurer, or a network is it really depends on your bargaining power. We all know that there are insurers or payers out there that will just refuse to negotiate. But the basic rule is if you don't ask, you're not going to get changes. So you might as well ask. You've got to read the contract anyways. At least I hope you're all reading contracts anyways. You might as well take a pencil to it and see if you can get changes. If nothing else, you've highlighted to yourself what the risks are in the contract, what you're concerned about, and you know those things aren't going to go away if they refuse to negotiate. Now, there are different things. I think sometimes individual practitioners feel like they absolutely don't have any bargaining strength. And there are different reasons why you might be an asset to a network. This is the time of year where I see more bargaining power than any other time of year. And I see it with Medicare Advantage plans. We're just gearing up. I'm writing tons of contracts. They have gone out and hired their network development people, and applications are due in February for new Medicare Advantage plans. And in order to get their application accepted, they have to have a network that meets network adequacy requirements. And those adequacy requirements include, an algorithm of how many of each type of physician you have to have in the service area. And those physicians include podiatrists. There's a number there. And when they're up against the wall, they're really willing to negotiate. It's pretty remarkable. Sometimes I don't know how these small plans are ever going to make it with some of the numbers I see them negotiating with on price. But whenever you see a new plan coming together, you see a contract that you haven't seen before, that's an opportunity to negotiate. States have network adequacy standards as well. Even if you're a single provider, meeting those network adequacy standards, and that obligation gives you some leverage. Obviously, as always, especially with the big payers, big groups tend to have more power. If it's a current payer and you're seeing a lot of this payer's members as an out-of-network provider, you can certainly say, listen, I'm getting paid X as an out-of-network provider, and your members are coming to me. Why would I accept these lousy rates? And that's negotiating leverage as well. There tend to be 5 clauses that we always go back to when we're helping solve member issues. I call these the 5 clauses that come back to bite you. First is payment. And the basic thing about payment is look at the payment amounts. If it's not enough to cover your costs, there's no reason to read the rest of the contract unless you can get those increased. Don't enter into the contract if it doesn't pay enough. Because these days, statistics show, at least in the private insurance world, commercial insurance world, I should say, most employer-based coverage offers out-of-network coverage. The largest numbers of enrollees are enrolled in plans that offer out-of-network coverage. So you can still see members, even if you're not in network. And that's a change from the way it used to be. Now, clearly, in the exchanges, that's a little bit different. We're seeing a lot more closed network plans, but basic employer insurance, it's open network. So it's really important when you look at those payment terms to make sure you understand what you'll be paid. The health plan should be providing a fee schedule, or at least 20, if you turn in 20 codes that you think you're going to bill, a schedule based on that. You should be able to ask about coding bundling procedures or methodology if you have particular questions. And if it is an incentive contract, they should be providing information that's enough for you to understand the potential up and downsides of the payment arrangement. And state law frequently does require health plans to provide this information. Obviously, state law doesn't apply to all plans, but it does apply to a lot of them. Another key provision is understanding what kind of organization is offering me this contract. If you haven't heard of them before, it's really easy. Google them. I do this every time I get a question about a particular payer, is I Google them. It lets me know, are they actually an insurer, or are they just a network that's being sold to different insurers or different payers, administrative-only type of organization? If it is just a network, one thing you want to notice is what kind of services they're offering to health plans. If they're offering repricing or secondary networks, this would be something like multi-plan. You might want to go in cautiously. Secondary networks are where you're not considered a preferred provider, but you still get members see you and they still get a discount on their services. So if you only want to be in a primary network, you need to make sure that the contract guarantees that to you. It says you'll be in the provider directory and that you'll be at the most favorable cost-sharing level. Some of the key provisions and really understanding what your obligations are under the contract and who you're agreeing to provide services to for that payment rate are in the definitions. They're the definitions of who's a payer, who's a member, what's a benefit plan. And taking a close look at that and tying those all together is really important. It helps you understand the breadth of that contract. Whose individuals am I obligated to see? And particularly if the payment rate's low, but you don't think it's going to be high volume, you need to make sure it's really not high volume. I mean, we see it's pretty expected, even in the case of insurers, that they're going to pull in their affiliates. And you know, you think of a health plan like United these days, who's buying up every little local plan. The affiliates can get pretty broad. So you want to take a look at those definitions. And you don't want to agree to one that's overly broad. Also with assignment, and again, this is a lesson learned from Multiplan, when they were buying up everything. For big insurers, maybe not so much a deal. For networks, this becomes an issue. You really want to make sure that's as narrow as possible. You'll usually see successors, like somebody who buys the health plan or network in whole, being assigned your contract. So they're able to take your discounts as well. Take a look at that assignment clause. It's not just, it's usually in the miscellaneous section. Seems like it's just legalese, but it includes some really important legal rights. One of the biggest issues we hear about at APMA is payers trying to get back money for claims that were paid months or years ago. APMA in the Private Insurance Resource Guide has an entire contract or an entire chapter on this. The provisions that allow the payers to do this are most frequently found in the payments section, and they're usually under the audit section, or they might be under a section titled Overpayments, and it may just be under reconciliations. There are several reasons we see these retroactive denials. They've found out an individual wasn't eligible for the plan. Oh, thank you so much. An individual wasn't eligible to be enrolled. They've decided after the fact the service wasn't covered. They found out the individual had other insurance, or they've just decided to take a look at coding practices. So when you're looking at these provisions, you want to know a few things. Did the health plan reserve the right to do reconciliations, to go back, relook at your claim, reclaim payment that they believe wasn't appropriately made? And I'd say there's about a 100% chance that in fact the contract does that. You want to look at the look-back period. How far back can they look? And you want to make sure this is reasonable. A lot of states do regulate this, but again, state law only applies to a subset of plans. And APMA has probably the most comprehensive compilation of state laws on this issue out there. This also is in the Private Insurance Resource Guide. Those state laws address the look-back period. They address sometimes appeals rights, that they address what kind of notice you have to be given. Make sure that look-back period is reasonable to you, and make sure that you have a similar period that you can request reconciliations. If you realize the health plan's been paying you wrong for the last 6 months, you can request that that be fixed. You should have the same right as the health plan in terms of that look-back period. Another important issue is whether the plan has the right to just offset the amount against future payments, so they don't have to wait for you to mail them a check. They just start taking it out of payments that are currently due. That can be a huge administrative burden. So you want to see, do they have that right? Or can I get them to just, if I agree, I'll send them a check? And you want to make sure you have an appeal right. Frequently, contracts won't address the appeal right, but those will be included in the provider manual. If you're obligated to agree with the provider manual, get a hold of that manual. Another issue we see a lot is amendments. A health plan sent out an amendment. It's highly unfavorable to the provider. So we say, go back and look at your contract. What did it say? Can the plan just unilaterally amend the contract? Though that's usually the starting point in every contract. They'll want to say, we can amend this with 30 days notice. You'll want to look at the circumstances. Very commonly, and this is hard to negotiate out of, they'll allow the plan to unilaterally amend where it's required by law. Fair enough. But you should be looking for changes to that. And a lot of times, it's easier to get a change that says, okay, you give me 30 days notice and the right to object, rather than it requires both signatures. Or meeting them halfway and saying, if this has a substantial financial effect on me, it requires both signatures. Those are the type of changes that are more easy to get than saying all amendments require 2 signatures. Finally, I'll mention the termination provision. And I think a lot of times I've seen healthcare providers who don't want to see without cause termination. They want the health plan to be obligated to them. But that without cause termination is a real protection for physicians and other healthcare providers. If you're under a contract that you're not happy with, you want to be able to get out. And whether it's 60 days or 90 days, you want that right. Now, granted, this works both ways. I mean, health plans have those without cause terminations, and they do use them. They use them to narrow their networks recently, and a lot of physicians found themselves outside of networks. But these have also been important in situations like, again, not to pick on multi-plan, but being in multi-plan, having them buy another network, not liking their rates, being able to go back and terminate that contract easily. You don't want to see a provision that ties you into it's 90 days before the expiration of the term. That ties you into a contract for an entire year, and you might be unhappy with it. They might have been bought out by another plan that you don't want to work with. Again, these small local plans are again and again being bought out by the big players. And the closeness of the relationship between the physicians and the medical directors is ending when they're bought out by these big plans. So you want to see the ability to get out with a reasonable notice. And this is also a fairly easy amendment to request. Plans don't push back a lot on this.